Welcome back, dividend and value investors. If you are new to this channel, welcome. I am European Dividend Growth Investor. On this channel, I discuss anything dividend investing related and with a strong focus on stock analysis. Having said that, today I would love to share with you my thoughts about AT&T's earnings. The stock is down about 9% in the first hours of trading, and it probably has several of you freaked out. I also know that many of you still own AT&T after the Warner Media spin-off and the related dividend cut. So let me help you out here a little bit by understanding what's going on. So guys, we don't listen only to the headlines, right? So let's open up the second quarter earnings report to really see what's going on. So let me highlight here, first of all, from a business side point of view, the company was actually not really doing so bad, right? Because they have actually been growing their business. More than 800,000 postpaid phone net adds is good from an AT&T point of view. So if we then look into the three different business units, they had the best second quarter postpaid phone net adds ever, right? In the last 10 years, let's say. They had 316,000 AT&T fiber net adds. This is really good as well because this is the high-speed internet in the US that people are actually also needing, and it's really setting them up for the future. And last but not least, they're really doing well on their promise to save costs. So this all looks good, right? This is what AT&T promised and what they're working on. But you know where the really issue is here? Cash is king. And the CEO is losing his credibility with all the promises he has been making. Because if we go into the cash flow numbers, you'll really see that it's looking bad. So for instance, they are decreasing their full year free cash flow guidance to 14 billion, which I believe was around 16 billion before, due to heavy investment in growth and working capital impacts related to timing of collections. So what I understood from this, they are already on track at this moment in time for their commitment to the investments in fiber and 5G. So they are bringing costs forward. This is good, but it is impacting free cash flow because these investments will pay our dividends in the future. The working capital impacts, however, are related to inflation and typical working capital impacts like timing of debt collections and the bills that have to be paid. Keep this in mind. So if we scroll a bit down still to the free cash flow, I believe it's here, you can see that the outlook here has been updated because they have currently 4.2 billion year to date. Remember what they were saying? 14 billion. That means they need to still find 10 billion of free cash flow. Whoever believes that the company is capable of doing this? It's really hard to believe, and this is where the CEO is really losing its credibility. I don't know. They feel quite comfortable with it, and I think they are really not honest to us. They are probably just opportunistic here, because if we look at the earnings call transcript, this question has been asked, right? How does AT&T get to that second half? They think because of wireless customer growth, price increases, and lower cash interest expense. How can you increase prices easily in a recessionary environment? I think this is not setting up for a lot of pricing power with AT&T. I hope he surprises us and he proves us wrong. I find it hard to believe. And, you know, AT&T has no track record of delivering on their promises. They are always over-promising and under-delivering. Also about next year, 2023 free cash flow forecast for 20 billion. Stanky, the CEO, believes that they feel really good about it. I don't care about his feelings. I want to see hard numbers. And this is the issue with AT&T and the CEO. And this is why I think they are being so punished so hard at the moment, rightly so, in the stock market. If we dive still a little bit further, let me show you this free cash flow in the hard cash numbers, right? Second quarter cash, free cash flow. They had 7.7 billion provided by operating activities. Capital expenditures, 4.9 billion. Plus vendor financing, 1.7 billion, gives them a free cash flow of 1.4 billion, while the dividends are 2 billion at the moment. This means the cash flow is not covering the dividends. Yeah, this really puts the dividend safety at risk. If we look at the 6 months period from last year, 5.8 billion in dividends, 4.2 billion. Also, even the full half year that we have passed now, dividends are not covered. This is something you really need to take into consideration. What I also would like to show you here from the cash paid from capital investment, they are currently negotiating with some of their vendors to obtain favorable payment terms of 120 days or more. Effectively, what they are going to do is they are going to use their supply chain power by squeezing out the vendors to postpone AT&T paying their bills, because this will give them a good working capital benefit in the upcoming quarters. This is nothing sustainable. It will only piss off the supply chain, and they will have to pay that bill in the future by weaker relationships in the supply chain. So guys, this is really it, why AT&T is so down. It's really a confidence in the CEO not living up to their promises, a downgrade in the free cash flow, and a company like AT&T is mainly living by its free cash flow because they need it for paying the dividends and paying their debt. This is a kind of a business that needs to have a stable and predictable free cash flow. It's not a high growth company. That's what's mattered. So if you think now that this is maybe a buying opportunity, look, you will get it according to AT&T and Seeking Alpha. The numbers are not updated yet. You will get it for an 8.19 forward earnings. I think this needs to be revised down. It's probably a 10 PE going forward. You judge it yourself whether you find this cheap. I'm not investing in AT&T. I moved out when it announced the Time Warner was a spin-off. I got it out. I got out at $32 at the time. I'm happy. This CEO is not reliable. The numbers are all the time overpromised. They are under-delivering. Every time the same. There's no credibility with this company. In my opinion, the CEO needs to be removed. Until that, I will far stay away from AT&T. Thank you for listening. Cheers.